Yo, what's going on, ladies and gentlemen? It's Cole Corcoran back with a new Wyckoff video. At the time of recording this, I'm literally just finishing up right now on my new website that I made. It's called learnwyckoff.com. So if you're new to Wyckoff methodology and you're still getting a grasp on just like the main concepts, then I would suggest you head over there. I have a really good page. It's like a almost like a dictionary, like a blog post. It's just a one page on the site that I encourage everyone to look at. It's the Learn page, and it's pretty much just like a 15-minute article giving you all of the fundamentals of Wyckoff methodology. So if you ever watch these videos and there's like certain parts that are a little bit confusing, you can go back and refer, or you can go back to that blog post and try and get some context from it. Okay? So this video, I'm going to be going over a nice EURUSD sell that I caught last Wednesday. So let's just get right into it. As you can see on the hourly time frame on EURUSD, we can, I guess it's more like the 4-hour daily time frame. Anyways, we can see that there is a bit of a market cycle here. If we just look at the last imbalance, we'll see this large accumulation that took place here. Right, we have all this liquidity that got swept the downside, and it eventually caused price to make a new high. And then from here, we got a distribution after price was oversold. And right now we're kind of chopping around. This is the kind of price action you want to see leading up to, you know, price coming into an imbalance or just leading up to creating a new cycle. It's pretty much, it's called a creek, what it is. So when you see like price move down like this in a really nice channel, that's what you call a creek, and it is usually followed by a large imbalance. All right, so in situations like this on the higher time frame, there will usually be some really good opportunities to sell leading into this area, right? So we can measure the 50% of this move that caused the new high, which is, it's pretty much the spring of the last accumulation. We can measure this and kind of get an idea of how much longer we should be selling for. So the most pro trend trades at this point for the higher time frame would be looking for sells. But like I always say, I don't like getting too caught up into the higher time frames because, you know, once New York open happens at 8 o'clock, price could be showing you buys or sells, and you kind of just have to adapt to whatever price is showing you at that immediate moment. So that just gives you guys an idea of where I was at. You can see on the 15-minute, it could kind of fool you that this would be like a demand zone. I think I actually was looking for buys originally. So you could definitely be looking for buys here. And then if we kind of just follow the supply zones, you can see we had a really clean distribution here. All right, swept some liquidity, created another distribution, tested it again. Let me switch this to supply zone. And basically there was two areas that I was looking at for price to reverse and to look for a sell. We could have looked all the way to here, but I was thinking we might not get there during this day. And the more closer price action that I was looking for was this area here. Was that from London session? No. So yeah, I was more eyeing this price action up here. If we went on the DXY, which I can't really show you, like I always say, it'll mess up my replay mode. But this is the area that I was looking at for a sell, because you can see it just caused price to continue lower, right? Kind of following the structure here. So this price did tap into supply, caused a new low, and then we came up higher and then caused another new low. So pretty much the two areas we'd be looking at is either here, and I wouldn't be able to take a trade off here. I'd have to wait for another distribution, but I was willing to take a limit off of this area here. And you can see why. Like I said, you know, we have a really clean change of character and a sweep. All right, so this would be the change of character. That's the sweep of liquidity. It's just a nice consolidation, nice sideways price action. Once you get into trading a lot, you'll kind of just be more intuitive with seeing these consolidations and what's cleaner and what gives you confidence. And sometimes it'll even be hard to put like your finger on exactly why. It's just kind of your intuition. But this one's really clean. So we've seen here, I was deciding whether or not this area tested the up thrust already, or the sweep move, and for some reason it might have been to do with the DXY correlation, but I just wasn't convinced that this move was tested yet, and I wanted to see us sell out of this area. So I noticed we did test the 50%, but we didn't test the 66% yet. So I knew, okay, maybe that's a chance for us to enter off of. It might be a chance for us to sell out of. I only recently started using the 66%, probably the last like 3 months, and it's because I read in a book that's what Wyckoff used actually. He used the 50%, which I've always used, but he also used the 66% for looking for pullbacks. So I started using it as well, and it's worked pretty well. So how I kind of plan this out, you kind of want to plan a few different scenarios before price comes into your area. And I was considering, okay, maybe, this did hit the 50% of our area, so it is a valid test. So I was looking for maybe us testing this area, because we did continue lower from here. We did sweep liquidity, this move here. So we could have definitely played out of it. But what are you supposed to do if you're not sure? If you're going to play it either here or you're going to play it here? What I like to do, here I missed it, either here or here. What I like to do is I'll set a limit at the higher area. So in this case, it would be at the 66%. And then I'll wait for a potential distribution that would, give me a reason to take price from this supply zone. All right. So we'll just set this limit up here that I was talking about originally. So anchor our stops here, add 4 pipettes for spread, and then our first take profit would be right here. Be a 1 to 5. And then we just kind of wait to see. I believe at some point I did take a buy order. I think I might have taken a buy order right here. But I'm not gonna study it because, yeah, I must have not taken it. But you could have taken a really nice buy order here. All right. So I'll replay that back a bit. So as soon as we get filled, you can see there wasn't really anything that would have made us trade out of the 50%. We didn't get a test out of it. We just immediately broke through it. So we got the fill on our original entry. And what do you guys see? This is something you got to look for a lot of times, especially if you're someone who likes going for stack entries like I do. So as soon as we test our area, as soon as we get into that entry, what can you guys see? We can see a nice distribution being developed, right? So we have this sweep of liquidity here, and now at this point we just wait for another change of character. And at this point, what I would do, again, wait for the change of character. As soon as that happens, I would reduce my risk. So I would move the stop loss of this current entry to this wick, and then I would throw on a half risk entry. So let's see what that looks like. So we got the trade. So again, you don't want to add your stack order before you reduce risk. So that's just, it's just good practice. So add 4 pipettes. So our stop loss would then be anchored to here. I'm not going to change it so I can actually see the risk reward. And then just the same as before, we just measure 50%. Place our entry here. Same stop loss as our now reduced risk entry. Okay, we got it. Let's move this. And then as soon as price breaks this low again, we can do it again. We can take another entry. And usually you won't be able to get 3 entries off of one setup unless the first entry is like a limit order. Because price, like if there's a distribution, it usually won't give 3 entries. Often a distribution or an accumulation will give 2. And then, like I said, if you want to get that third one, the first one has to be like a limit order based off of previous price action. Okay, so we got this. And now we just literally do the exact same thing again. We measure. First thing, like I said, good practice is you want to reduce that risk first. So we would move our stop loss of both of these trades to this line here, lined up with that test. So our initial entry would be break even and our stack order would be reduced risk. If you guys don't already know, every time I add a stack order like this, I'm only taking half as much risk as I am on the initial trade. So if on my initial trade on my accounts, like on my normal trade on my accounts, I'm taking $150 risk, I'll only be taking like a $75 risk on these stack orders. So, and that's not including after I reduce my risk. So at this point, the trade would only be like $25, maybe $40 at risk, and this trade wouldn't be at risk at all anymore. It'd be completely free trade. So we measure the 50%, I think. I'm like zoned out here. Yeah, okay, so we measure the 50%, take another entry, and we know to put the stop loss here because we just anchored that one. And all the first TPs would want to be here. So I took the first trade and the third trade here. I didn't take the second trade because I wasn't on my computer while that distribution was playing out. And there we go. Beautiful price action. So that first take profit, you'd want, when I have like 3 entries like this, it's really good because you can really just like secure profits while still being able to hold on to a lot of volume for the longer trade. So I think the first initial trade I took, I think the first initial trade I took full volume at this 1 to 5 just to close out some profits. And then the next TP would be somewhere here. Well, not somewhere, it would be at this low. So that would be like, can't even see that middle one anymore. This is it. Yeah. This would be like a 1 to 9-ish on both of those. So I always, if you guys don't already know, I always split my trades into 3 orders. So each of these entries would be 3 orders. So altogether it would be 9 orders. So I have 9 different areas that I can take profit at. But like I said, the first one I would be taking 3 out of 3. So this one would already be closed 3 for 3. By the time we hit this 1 to 9 here, I would probably only have I would probably close 2 out of 3 on the second one and the third one. So I would have 2 out of 9 of my trades left open. So let's see. Things are slowing down a bit. We gotta speed it up. Go to 5 minute. And then the last area where I would be looking to trade, I think I took profit on this one here at like a 1 to 14. I ended up market executing out just because it was getting later in the day, which can be good, can be bad sometimes. But we'll go back to the hourly like I was showing you guys. And remember, we measured the 50% of this accumulation on the 1 hour time frame. We can expect obviously price to retrace to that 50% and then we can start looking for buys. So what would stop us from just placing our take profit here for ourselves? And I think that's the smartest thing we can do. So let's just say we put that take profit here and here for the last 2. That would be a 1 to 19 and a 1 to 21. So we'd be taking some profits at a 1 to 5, 1 to 9, and then roughly at 1 to 20. Let's just see that play out. You guys get the point. and we actually ended up getting some more sells the day after. So it was a really good week for EURUSD. Something that I don't mention as much in these videos is I'm always looking for buys and for sells, right? So when we first opened for New York Open, I think I took like 2 losses on buys during this time. And when I was getting into the sell, I was taking a buy out of here as well, just to kind of trap the markets and see. I just wanted exposure. If we're going up, I wanted to get into that buy. I'm willing to lose a sell. And the same thing for the sell. If we're going to move down, I want to just get into a sell, try and reduce my risk as soon as possible, and just get that exposure to the market. So whichever direction we go into, I'm involved. So you could have, like I said, you could have got a buy entry here, and that's something. I don't want you guys to think that I'm just waking up and seeing these setups and it's the only thing that I'm looking for. I have 100% conviction. Like, I wasn't too certain that this would play out, so I was looking for buys as well. But once you get price action like this, where you're getting a really clean distribution in a supply zone, you just kind of have to forget about the other side and take the trade and focus, get some laser focus on what price is showing you at that immediate moment. Because when stuff like that is printing, when there's a really nice clean distribution in a supply zone printing, you can't hesitate. You just have to play the trade. So that's the setup for today. I hope this video was beneficial for you guys. Definitely check out my website if you have any questions. Even if you don't want to check out the website for super beginner stuff, we have resources on there like books, other YouTube channels where people give a lot of good free Wyckoff methodology information. I would really suggest going on the website though and checking out the books. There's a ton of really good ones that I've learned a ton from over time. And we also are going to be doing free consultation calls on there soon. So if you guys have anything to do with Wyckoff trading that you think we could help with, that it would help your trading career, you guys can get on a free call with us. So that's just something we're working on. So stay tuned for that. Check out the website. Check out my Instagram as well, where I'll be posting updates and different trades that I might not post on YouTube. Anyways, guys, I'm rambling on. Thank you so much for watching this video. I hope it was helpful. Make sure to leave some comments, leave a like, and yeah, take care.